Good evening. So this is an article looking at Tharisa, THS. So let's get into this. So yeah, so this is going to be published in the next day or so. So it's just considering the 1H25 performance update. So this was the news on Monday, 19th. So quite interesting. The short version is that they said, we're going to see a decrease of between 76 and 84% to earnings per share. So a real big drop between 2 cents and 3 cents with a tolerance of 10%. So very, very big drop in profits. Back here, this is the second quarter results. So this is the production results that came out about a week or so before, back on the 10th. So I'd actually run through the maths of that and let's just sort of work through what those numbers look like. So you can see here the combine them together and you get these actual results. So that was the PGM number of ounces, that was the tons of chrome, that was the basket price. You can see that's combined of the first quarter, second quarter price, and then that's the combined first quarter, second quarter on the chrome. Now notice this is tens of tons, so we're not getting 2,530 per ton, but it's per 10 of tons. Reason I'm doing this is just for charting that you can see, because obviously these numbers are similar to one another, that it just made it more meaningful for charting. So what that translates into is this many dollars million results. I've just assumed these extrapolate at the same level. So this is an annualized figure. So you can see here PGM, even with a not great result in the first quarter and some challenges in the second quarter, we can see we've got actually quite a bigger, better result on PGMs. But you can see here we've got a much lower, worse result that on chrome. And when I say a much worse result, it's broadly similar to 2023. So actually the first half results weren't as terrible as all of that. But of course, at the same time, the profit, the earnings per share, was much lower. So the earnings per share work out at so this 2 cents per share it equates to 5.9 million. It's between 2 and 3, but in this article I'm just going with 2 as the more conservative. And what I do is I just work backwards to say, well, okay, to start off from that revenue figure, so that all adds up to 634, and to end with that in the first half, which in terms of the sort of full year guidance, what I've done is I've plugged in the actuals into 50% of the guidance, of the lower guidance here, to get to a you can see here. So if the guidance is 1.4 million, I'm taking half off that, adding the 62.4 actual. So I'm keeping 70 of the guidance, half of the guidance on the lower, but I'm keeping the upper guidance where it is. So that's kind of the explanation of this. Down here, these are the actuals. So I'm kind of going with those as being the outcome for the whole year. And we know that the actuals are different and higher to these lower numbers. So the lower numbers are kind of almost a sort of worst case scenario, both on volume and on price, basket price. Whereas these are sort of what I see as more realistic. And we'll talk a bit more about those in a minute. So let's get into the article. So what do we say? So I braced for impact on Monday, after the RNS said, profits are going to be down 70-80%. and I'd covered this before, so I'm just referencing back to a prior article here. Tough start to 2025. It seemed that the things weren't getting better, but the share from the start of the week, so it's this point here, just shot up and went up 13%. So how so? So just talk through what the challenges were in the first quarter, and then looking at the second quarter results, that there were some negatives, that the amount mined was down 12.4, the amount milled was down 14. So there was some negatives there, and they blame bad weather for these negatives. Interesting though that the actual amount of PGMs mined went up, so that obviously the grade was higher for that to be the case. But also we can see the basket price is up as well, not by a vast amount, but it's up about 3%. And then here, this is the bit that obviously they also call out, is that the chrome price was down to 235 from 271 in the first quarter. So I mean, all of that taken together, you might look at and say, well, it's not great. It's not terrible, not absolutely terrible, but it's not amazing. Obviously, the chrome price is a big hit. And this is what they blamed on. The production report highlighted unprecedented weather-related operational challenges and a weaker chrome price. So I just basically used my model that you just saw, and I kind of got to those numbers anyway, because I was looking at the cost of sale and looking at the different elements. Now in here they say relative to the 6 months ending. So I think what they mean here is the 6 months ending 2024. It's a bit of a typo in the RNS, but anyway, just call that out. The point is that the modeling that I did used so using that average price gets you to that gross profit margin based on 208 per ton cost of sale, and then 180 per ounce margin on the PGM basket based on the 1421. So yeah, when you line up these numbers, I mean, revenue's down by about 90 million, and that's obviously a big chunk of that is the chrome. The margin 16% sounds good, but not really, because once you strip away the other costs, you kind of end up with a net profit of 12, which obviously would be that number doubled. And then relative to the share price, that would be a price earnings of about 20 times. So, I mean, obviously that would be a pretty harsh outcome. But what I do is in the second half, the prices recover, the quantity produced is and has recovered. So on the basis that things pick up and that we see that for the first half combined with around 45 million for the second half, and 45 being, that's a third of that number there. So we're sort of saying about 66% of the upper performance in the second half. So it's not that aggressive when the prices, so this 1600 and this 300, 3000, but 300, so divided by 10, 300 is actually very, very close to real prices, because here, look, chrome is at 295, so it's $5 below that 300. And then the basket price, so I make the point here that this 235 that I'm using as the lower is pretty, I mean, it's very hard to conceive that that would be the average for the FY25 year. It's not, I'm not, I'm not saying it's impossible, but it just, the price would have to drop back down again very, very severely for it to end on that average, but it's always good to see what the downside looks like. So let's kind of run with that. So what I'm saying is that the outcome is somewhere between that number and that number, but I'm saying as well, based upon the current prices, these numbers, these prices are quite hard to get to. As I say, you'd have to have a very sharp decline in price for it to average down to those numbers. Anyway, that's yeah, and obviously if it was those numbers instead, combined with, this is the other point, combined with these volumes here, so obviously that's quite a big difference there. There's what's it, 280 million. Sorry, start again. 280,000 ounces, and here 200,000 tons of 22,000 tons of difference there. So volume wise, I don't think we'll necessarily get there, because obviously we've lost half of the year with these results here, which double up to these results here, which will sorry, not double up, but these are sort of the lower target plus these numbers. So 50% of the lower target plus these numbers is these numbers, and then anything above the lower would be these numbers. Okay, so on the basis that this was the outcome, that translates to this profit after tax in GBP terms. So that's 51 million translated into GBP, but also knocking off the interest payments and the tax gets you to 27 million. But if we landed on that number, that would translate to nearly 80 million profit after tax, which would put it on a 2.3 times price earnings, whereas this one would be a 6.7 times price earnings. So to my mind, 6.7 is a decent number. So as I say, this 1600, rather than this being some sort of aspirational number, I mean, that is not far off today's price. Today's basket price for PGMs is 1564. And that 1564, how I arrived to that is that basically I'm using that. Those are today's prices, okay, according to fast markets and trading economics. And then I'm using the MRE product mix to get to a basket of 1564. Okay, so made up of platinum is $603 of that 1564 basket, and so on. So that's just using that should either be bang on or very, very close. Okay, so actually when you look at it this way, no wonder Monday didn't crash the price. Hidden in all of that bad news was a lot of good news, which I guess people hadn't really worked through and understood. So anyway, let's kind of get into this. This as well, 1465. Obviously, that is lower than this, but 1465 is nearly $100 per ounce higher than 2 months ago when I last wrote about Caro. So and of course that 1465 excludes the nickel, excludes the copper, so 2,200 tons and 2,500 thousand tons per annum. So that's 4,700, and that's obviously 9,500 a ton, and that one's 15,500 a ton, roughly. Margin on that's probably around 4,000, and that's on the basis that you're actually not producing copper as a byproduct. That's more along the lines of if you're mining for copper. So as a byproduct, the margin is probably quite a bit higher. But what I did to get to that number, 10 million per year and 15, was to treat it as at about 40% margin. So kind of assuming that there's a 60% cost of sale, even though that's a byproduct to all of the other things coming out of the ground at Caro. Okay, so that again, that might actually be a more attractive number than those numbers, but that's that. Then, so I guess what I'm saying here is that the basket price is great news. The chrome price is further great news. The even if there's only a pretty modest outcome in the second half, the share price looks cheap, in my opinion. None of this is advice. This is just me speaking my thoughts. But this, and you of course make your own investment decisions. But seems to me that the share price doesn't really reflect the capability of this to make profits. And even if it is just this lowest one, I mean, that's still like the equivalent of a 15% ROI, 6.7 times earnings. And if it's the uppercase scenario, it's 2.3. I mean, that's kind of not far off. That's above 35% ROI. So very, very strong numbers. So that and here I'm sort of saying, well, something like that, and that would be a 4 times earnings, obviously 25% ROI. That feels achievable. I also go on to just look at compare to Sylvania, Jubilee, and also just palladium and platinum. So you can see palladium and platinum are sort of over the past year are at 0%. They haven't gone up over 12 months. So they are only the same price as they were 12 months ago. But you can see here that relative to those metals, THS is down nearly 20%. And then the yellow is Sylvania, so that one's down slightly more. But they're obviously close to one another, and this one is recovering. Sylvania is recovering faster than THS. In other words, people haven't really understood THS as much as perhaps they've understood the potential at Sylvania. And down here is Jubilee. So again, Jubilee has also reacted strongly to the news, but it's lagging behind, at nearly 50% lower than 12 months ago. And I would venture to say that that's connected with its copper and Zambia and the troubles it's had with ramping up production and power and anyway, that's probably for a different article. It's also interesting to see Johnson Matthey's. This is their platinum report for 2025. So they say to us that platinum will be in shortfall in 2025. Supplies predicted to decline. That consumption and demand should increase. So that's we're looking automotive decreasing by 5% because battery electric is going to grow so fast in 2025. Now, palladium as well is going to decrease because of battery electric vehicles. Once again, rhodium will remain in deficit mainly because of supply falling faster than demand, and so on. Now, obviously, these guys are expert in PGMs, so their opinion carries a lot of weight. But I say here, the problem with this that the report from Johnson Matthey assumes that battery electric vehicle sales shall rapidly expand in 2025, but the fact is they haven't. Hardly at all. That this 15.2% share in the EU, I should probably add that in, is less than half of the market share of the hybrids. And hybrids use more palladium in their catalytic converters than just ICE engines. Yeah, so ironically, uh, rather than seeing a fall in demand, um, the numbers to me suggest that there'd be a rise in demand in 2025. Um, so they talk of a 7% drop in demand. I just think that, they themselves say that, well, that could be smaller. I just think it's going to be actually quite a lot smaller. That's the EU sales for the year to March 31st, January to March. So hybrid electric vehicles, so those contain catalytic converters, 35.5 market share, plug-in hybrids 7.6. So add those together, you get to 43.1 versus 15.2. So yeah, two and a half, over 2.5 times more hybrids than battery electric vehicles. Obviously, yes, petrol and diesel are decreasing rapidly, but even those, I mean, it's not, they are still making up what, nearly 40% of the market as well. So 84, I mean, who knows what these others are? Let's assume they are, I don't know, milk floats and hydrogen cars or something. But I mean, let's give BEVs the benefit of the doubt and lump that number in there. I mean, you're still looking at sort of 81.4% of the market using palladium, using platinum for catalytic converters. Um, Now, from memory, it's palladium is used in diesels, platinum is used in petrols. So obviously, it depends on the hybrid, whether it's a diesel hybrid or a petrol hybrid. You can get either. So yeah, that's kind of quite an interesting one. And this is sort of further evidence. So this was for the EU. This is for the US. So purple line is these FHEV is I think fully hybrid electric vehicle is the F, and then that one's a plug-in. So plug-ins are sort of um, static in terms of share. Battery electric vehicles are dropping in share in the US, while hybrids are increasing at a steady rate. So the not just that the number of vehicles has increased, but the share of those number of vehicles has also increased. Further evidence is here from the World Palladium Council. They say palladium in 2025 will be in deficit just as much as platinum will be. Still be in deficit next year, still be in deficit the year after. There'll be a small surplus come 2028. So that that gives further positivity. This news came out today, and I clocked it. I can't remember where I saw it, but this is a very popular brand by I think the most popular brand in the US. So this is Toyota. This is the RAV4, RAV4, I guess it's called. Um, and today's news was that they're only going to be selling it as a hybrid. So there's no ICE cars, there's no BEVs, no battery electric vehicles, just hybrids and plug-in hybrids. That's all for the most popular car in America. So to me, that's a sign of the times that hybrids are the way forward. There's a lot of there's a lot of evidence that customers, because it obviously gets around range anxiety, you can still fill it up at a petrol station. You get good economy. So there's lots of reasons to like hybrids in favour of going fully electric. So that's yeah. So to conclude, I mean, yes, we saw a weak first quarter, which was driven by challenges that I discussed in at the top of the article. Um, the actual result in 2Q25 is actually pretty strong. It's actually pretty good. The bit that lets it down is its prices. The unit prices of Chrome, particularly. That sort of held it back really. But here in 3Q25, we no longer see those challenges. We're seeing stronger pricing. We're seeing, I think, as far as the news flow goes, better production levels. I mean, obviously, we don't know that for certain, but we do know that they've released an update to say that there was weather-related conditions and pricing-related conditions, and we know that those don't exist today. That the there's also the upside to the caro. There's upside to um, that that uh, that the share price itself is at an attractive level. The I think the fear, as I've sort of given various pieces of evidence, that automotive demand, decline in demand for PGMs, to me seems quite misplaced. Doesn't seem in keeping with the actual news flow and the reality. So I'm pretty optimistic about THS. I think we appear to be on track for at least a midway result, and a midway result is a peak price earnings of 4x, which is cheap. I mean, it's and then with the potential for upside if the price of a PGM basket continues to go up. I mean, let's not forget, folks, that let's just quickly recap that. Let's just quickly draw this over here. That let's not forget that for example, rhodium. If we go back a couple of years, so if we go back a couple of years, I mean, this hit 30,000 versus 5,000. So that's over 5x the price of that's over 5x the price. That's rhodium, and then palladium is at 1,031 today. But within the last few years, I mean, we saw 3,000. So again, triple, more, almost triple of that price. And platinum as well. Platinum over 5 years. We saw highs here of 1,200. So obviously this is sort of less. This one's less pronounced, shall we say? That we can see it's certainly had some ups and downs, but relative to the gold price as well, that you can get 3 ounces of platinum, or over 3 ounces of platinum per ounce of gold. So the exchange rate of gold for platinum is very, very cheap. Platinum is not 3 times more plentiful than gold is. Platinum's actually less plentiful. Platinum versus gold, earth crust. Just to show you this. Yes, how rare are precious metals? So this is the Royal Mint. And yeah, so gold, silver, platinum are precious metals. So yeah, go away. So you can see there, platinum is 25% more abundant than gold, according to the Royal Mint. So it's currently priced as though it were 12 parts per million, and it's not, it's 5. So pro rata to gold, it should be, oh no, other way. Let's try that. Pro rata to gold, it should be at 2,640 an ounce, based upon its prevalence in the Earth's crust. So obviously that's just and I suppose whilst we're at it, I've seen people talk about 14 times quite often, but according to this, it's not 14 times at all. It's 18.75. But the current price differential is 100 times gold being 3,300, silver being 33, 100 times different. So again, for 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 silver to catch up to gold would imply that silver should be 176 an ounce. It's all fun stuff, isn't it? So who knows? But yeah, anyway, that concludes this article. If you enjoy the article, I haven't published it yet, but it will be published at the oakbloke.substack.com. So subscribers to my YouTube channel get first dibs on reading this, or at least listening to it, and you can read it on screen in the background there. Yeah, this is one of my Oak Bloke 25 for 25 ideas, and on my Substack, there's also a link to Emmaus. If you enjoy the videos, if you enjoy the articles, then you know, do consider supporting Emmaus. Emmaus is a charity. It's, money doesn't go to me; it goes to Emmaus. They basically are a homeless charity, but it's a homeless charity that gives a hand up, not a handout. So people get to stay in one of their accommodations, but they work within one of the Emmaus businesses in return. So it's all about getting these people back up, getting the colleagues back up on their feet, getting them into training or into just kind of helping them get back on their feet. And so Emmaus do a lot of amazing work, and I really appreciate your support in supporting them. So anyway, Oak Bloke signing off. Cheerio from me, cheerio.